Hey there viewers, in today's video we will discuss about protests plus Zoom video and Dick's Sporting Goods earning. But before starting the video, if you have not subscribed to my channel Beaming Wink, please subscribe it. Investors will be hyper-focused on ongoing nationwide George Floyd protest plus earning from Zoom video communication and Dick's Sporting Goods Tuesday. Large groups of people from cities across the country have been protesting police brutality in the wake of George Floyd's death in Minneapolis on May 25th. The civil unrest and violent nature of some of the protests sparked worry about market participants that perhaps they could lead to volatility in the stock market. Among one of the biggest concerns regarding the demonstration, the potential of a second wave in coronavirus as a result of massive gatherings in which participants are not abiding by social distancing measures. Additionally, consumer confidence could falter. The West and Northeast had seen confidence hit hardest, but started to stabilize recently. The firm said he will be keeping a close eye on these regions to see if they resume their downward slide because of weekend's event, or if they will continue to support by reopening plans. On the corporate earnings front, Dick's Sporting Goods will release first quarter earnings result from the market open, and Zoom Video Communication is scheduled to report results from its first quarter after the closing bell. While some stores remained in operation, a number of Dick's Sporting Goods locations had to temporarily close as a result of COVID-19. Dick's reported fourth quarter results March 10th before the COVID-19 crisis gained steam in US. At the time of announcement, CEO Edward Stock explained that the company's outlook included a degree of caution regarding the rapidly developing coronavirus. Dick's Sporting Goods is expected to report on the adjusted loss per share of 79% on $1.29 billion in revenue, according to analysts polled by Bloomberg. According to alternative data from Placer AI, foot traffic at Dick's over the recent weeks shows signs of strength. The firm noted that Dick had a strong 2019 and was off to a good start in the first 2 months of this year before COVID-19. Placer.ai noted that Dick could hit hard in March when traffic declined 64.4% year over year, but has since recovered. Just as the brand entered the pandemic as one of the strongest retailers, so does its recovery look to be one of the fastest paced. The week of May 24, 2020 saw growth of nearly 15% compared to the week that preceded it, and this was surpassed by near 16% growth heading to a week of the 11th, the firm wrote. Share of Dick's Sporting Goods fell 25% this year, while the broader market was down 4.5% in the same time period. So often referred to as a winner amid the COVID-19 crisis, Zoom will face its moment of truth when it reports earnings Tuesday afternoon. Zoom stock soared a whooping 198% so far in 2020, and now they added $20 billion in market cap since its last earnings report in March. Everyone from world leaders and corporate executives to average people have used Zoom in recent months as a way to communicate while abiding by shelter-in-place orders. The video conferencing platform is expected to report adjusted earnings of 9 cents per share on $203 million in revenue during its first quarter fiscal 2021. Zoom previously provided fiscal 2021 revenue growth guidance of 45%, down from 88% in the same period last year. Analysts view Zoom's guidance as too conservative given the paid user addition during COVID-19. Zoom share has been on a tear of hit record highs Monday ahead of its earnings report. The main question going forward include whether or not the stock may have run too far too fast, and is the $57 billion market value justified? The option market is currently implying about a 14% one-day move in either direction for the stock following its earnings announcement. Well, that was all in today's video. If you liked the video, then share it and don't forget to hit the like button.